Welcome back. In the just ended Q1 results season, Nifty EPS grew by 32% versus expectations of 25%, while EPS for the 231 companies tracked by Motilal Oswal, the EPS grew by 52% against expectations of 49. That's according to the MOFSL results wrap. That report says Nifty is trading at 8% below its long period average, and therefore the company is overweight on financials, consumption, automobiles. But more importantly, the company, MOFSL, is starting its annual Global Investor Conference on Monday. It runs for 4 days. And I have with me two of their stalwarts, Rajat, Rajgarhia and Sachin Sahane. Gentlemen, thank you very much for joining us.
Thank you.
Thank you for having us.
First up, Rajat, you are entering this conference on a high note. It's a great time to sell equities, right. Given this. Can you remember any other time? It looks like we had a 23% CAGR over the last 3 years and another 32% EPS growth now. I mean, this is a long period of good growth. It's coming after what, 2004?
Yeah, so this is the 19th year of the conference. So we started this in 2004. And if you remember, those first 5 years were probably one of the golden periods, both for the corporate and the markets. So 2004 to 2008, I remember every year markets making a big high, the conference scaling up newer heights. And I must say, Latha, in 19 years, we have seen all cycles of markets, right? But always good to host an event when not just the markets, but the overall sentiments, the economy, the political goodwill, and the approach of investors from all segments are at their high right now.
Okay.
So we are really
I will come to that, especially the kinds of people who are now wanting to buy, because I think there is a sea change in that. Yep. But just a word on the report and the takeaways for the conference. Sachin, your report says that we are still at only about 18.5 times 1 year forward earnings. So you think that we have a good runway? Long period average itself should take us to what, 21,000?
So Latha, I would say we will be in a consolidation phase for a while. Markets will take their own time to settle down because we have seen a strong run up in the last few months, obviously on back of very strong liquidity.
Yes.
So I think markets will take their own time to consolidate in this range for a while. And then, India is the market where earnings are very strong. And I think the, forward earnings also look reasonably positive. We are factoring around 13 to 15% type of earnings growth even for FY25.
Okay.
So I think markets will move on further from here. And
but in fact, there is an intermediate period.
Yeah, intermediate period of consolidation, and possibly any correction would be an opportunity to add to one's positions.
Okay. So Rajat, just a word on that. Before I come to FIIs and non-FII audience that you will be addressing, the global discount rate, which is the US yield, going to 4.5 or 4.3. Will that be a bit of a dampener? Because that means the risk-free return is suddenly very high.
Yeah. So, Latha, many times over the last couple of years, we have seen every quarter either we're deciding that US is tightening or US is getting stable, right? I look at it that every time the talks of US tightening begins, we get a good opportunity to again build a portfolio, right? One thing is for sure that these interest rates are not going to come down in a hurry, right? Markets have their own wisdom to keep speculating at different points of time. But there is a very fundamental approach in the way the US rates are up or inflation is up versus India. I think in India, our regulators and our policymakers have handled things in a very balanced way. That's why our macro is far more stable. In US, I'm no expert, but I know that whoever I read over the course of last 8 quarters, every quarter I see views changing, right? So what Sachin mentioned about the markets consolidating, this is largely a function of the global markets. It's seeing some nervousness, but look at it, US itself is up high double digit this year despite all the concerns. So media headlines are one, But I think markets are right now not really being too much bothered.
No, that is a problem. The US growth is too strong.
Yeah.
That is one of their problems. But Rajat, the reason why I brought up this risk-free return is it really such a bother? Has your audience now shifted from being overly FII oriented to much more domestic oriented?
Well, Latha, this is something that I think we wrote for last 20 years, and finally, good to see that playing out. You know, remember how we just used to track daily FII flows and used to predict the next day market opening, right? Today, last 5 years, the ownership of Indian markets has moved so much from offshore to domestic, and within domestic, it is not just the mutual funds or insurance, but also real retail and family offices and HNI.
Can you give us some numbers?
So, look, you see that today in the daily volumes, the FNO, which is a very large component, I think retail and HNIs are a much more dominant player than the offshore guys also. If you look at the domestic ownership of equities, right, every month by default you have almost $2 billion of SIP money which is coming in, right? And that's very stable. You plot the chart last 60 months, every month that number is moving up. You have pension money, and plus I think a very important change that we are seeing is people are becoming far more open to taking some risk on their savings in form of equity, because compounding has helped them earn at least 15% post-tax return versus a fixed income which has made them probably 4 to 5% post-tax. So the difference is big over a period of time.
Okay.
Just to add, just to add to what Rajat mentioned, even in our conference, the interest which we are seeing from family office, you know, HNIs, that is massive, you know, compared to what it was over the last 2 years.
They are surpassing the number of foreign investors.
Yeah, I would say not in terms of absolute values, but in terms of the interest levels and their participation. They are definitely inching very, very close to, you know, institutional, and you see their participation in most of the blocks and, you know, other transactions.
Yeah, but in the context, you know, as you pointed out, private equities is a big category. Sachin, they're also selling a lot. They're using this rally to step off. Your thoughts on that?
Yeah, so obviously, what they invested a decade back, or maybe, you know, even earlier, obviously they would want to take some money off. Maybe some mandates may be running out of their time.
Is that giving you a sense that maybe we are at least near-term highs?
But there are so many private equity funds who are raising more money. In fact, today only I read this ex-CEO of Reckitt Benckiser. He has raised $100 million consumer fund. So he's planning. So I'm saying that there is still a lot of interest in fresh money coming in. So there is always, and capital chases returns. And I think India is a market where returns are the best versus so many other emerging markets.
Oh, absolutely. Okay, now I want to know from you all, what themes are you all trying to explore in the conference? Rajat, you first.
Yeah, so Latha, there are 3 key themes that I think investors want to play. The first, this financial sector has been like the backbone of Indian equities for the last 2 decades. And the best thing right now is that financial sector is very well diversified, not just at lenders, but also non-lenders. You have insurance, AMCs, many other forms, right? I think this space will continue to get larger and larger, and companies who are able to execute well. There will be fewer players, but very large size players. What you have seen in banks, where you have 5 big private sector banks and 5 PSUs, you are going to see that same norm in every segment of financial sector. That is one. And I think here winners are obvious. You just need to be patient to compound your returns with them. So that is one thing. I think the second theme is manufacturing. After a decade of last decade where we essentially saw consumption coming up, right now manufacturing is coming in at a little slow pace, but at a very definitive pace, right? You have seen segments right from a defense to a railways to a PLI coming up. I think come elections 2024, once this event is behind, you will see a lot more investment scaling up. This is one theme which can really make markets very interesting in the subsequent 5 to 10 years.
Okay.
And I think the third important thing will remain consumption, because this country as the per capita GDP keeps growing at a rate of 10-12%, every year you see more and more people becoming eligible for higher and higher consumption pattern. So these three themes are the central themes, and within that you pick up, what is attractive, what is scalable, but essentially the conference focuses on these three themes.
Okay. Sachin, you want to add in terms of companies, in terms of speakers, themes, panels?
No, so just what Rajat mentioned, the interest on companies, so within manufacturing, the EMS space, despite the run-up which we have seen, we are seeing huge interest.
EMS is still a very big bet for you.
Absolutely. So EMS is a very big bet even now. And also we are seeing very strong interest in consumption, especially discretionary as well as staples.
What about e-commerce?
Yeah. So another, we saw, some bit of good amount of valuation corrections in those names. So now we are seeing a very good interest in those names as well. So in fact, Latha, we have still some unmet demand on meetings, despite having a 3-day conference. It's amazing that we are still not able to allocate a lot of meetings to investors.
Okay, that is the level of interest.
That is the level of interest.
Okay, which is the sector or category where investors are asking for meetings? I mean, sectorally. So
as I just mentioned, it is all about consumption, discretionary as well as staples. It is about manufacturing, the EMS space, as well as in durables, and also in autos and banking.
Okay, all right. So that's where you're overweight, right? You're overweight financials, consumption, and automobiles. What about betting on IT? I mean, after a serious downturn, it's kind of back in the fashion, at least as a trading bet. Is not that a theme at all?
So, IT is generally a theme which compounds maybe at a rate of 15% over a period of time. But sometimes it overdo on the up and sometimes on the down, right? Okay. I think in the last 3 years, you saw sector multiples getting meaningfully re-rated. Yes. And last 12 months, you have seen as the US slowdown has crept in, the stocks have come off. But again, here you have seen large caps taking the more beating than the mid caps. Many of the mid cap ITs, which are still executing well, are almost at their highs. I somehow feel that many of these large cap ITs, price-wise, valuation-wise, are maybe in the right zone. Timing-wise, maybe a couple of quarters, because till the time you see adverse news flows coming out of US, people will just be little hesitant to build. But I think sometime towards the end of this year, my bet would be that people will start building in IT again, because it's still a sector in a downturn which still grows. The earnings don't contract.
Absolutely.
And plus the balance sheets and the dividend yields are the best that you can see in this space.
Okay. Finally, PSUs are really back in fashion with railways and defense.
Yeah.
Is that also a significant theme you all will explore?
Yeah, it will be, I would say, selective interest, because, a lot of clients some by mandate, and some have seen a bit of already a run up on PSUs. But still, some PSUs are definitely attractive. We have seen massive interest in utility space. So power and utility sector is something where government is also working on a lot of reforms. So we do see selective interest in that space as well.
Selective interest, though at the moment you all are underweight on energy and utilities, according to Gautam's report. Finally, the last word you want to say about your conference? So,
this is the 19th year, right? Whenever we see the responses from both corporates and investors, we always feel delighted. The one big remarkable change we have seen in the last 19 years is the diversity of investors and the companies that we see at the event. This makes this market a very structural long-term story, right? There is no concentration of either earnings on the corporate space or investments on the investor base, right? I think given that our sizes in the global economy and market cap ranks are scaling up every second, third year, right? We believe that we are entering a phase where both domestic and offshore money allocation to India will keep rising, right? And as we move forward onto the conferences, right, I think the size itself will attract more and more investors and larger
I think you put the themes very well on the table. I can't even wrap that up. It's so well said. All the very best for your conference.
Thank you.
Thank you.
Well, that's a wrap on the Motilal Oswal conference curtain raiser, and we will get you as excerpts and experts from that conference starting Monday. For the moment, wrap up on Bazaar Chartbusters coming up.